Hello everybody, welcome to Friday. It's May 1st. Today we had a down day and the market fell back down really right into the middle of the range. So far the range is still providing some support and hopefully we'll see that hold. We'll have to wait and see how things go. Um, the uh, the market itself seems to be responding to some of the earnings issues. I mean, there's some interesting things that came out today with Amazon reporting 26% increase in sales, which isn't too surprising considering how many packages I've seen delivered here, even just in my neighborhood. But they warned that they were going to have a tremendous amount of costs going out to prepare their facilities and what have you to be safer against the virus. And so they expected that their profits would be down. So there's a company that's making a lot of money but having to shift their processes to handle that. And so one question that has come up a few times over the years, which I think I'll address here, is just, why don't we use more individual stocks? So we have some companies that we really like, and why don't we just buy those companies? And one of the biggest problems is just pure diversification. So, when you look at a portfolio, how many stocks do you need to be diversified? Technically, it's about 20 stocks. Uh, but also I find it easier to work through themes. So let's say that I think software is going to be great. And I'm going to choose some companies. So I can be right about software and wrong about the company. I'd rather buy an index filled with software companies. I have a better chance of capturing those companies that are going to do well in that environment. Now, if I was able to pick out the few companies that really did well, I would do better than buying the whole basket. But you'll see within our portfolios, we buy lots of different indexes as an attempt to try to capture all that. So thank you very much for watching this week, and I look forward to talking to you again on Monday.